Right Capital is designed to achieve financial planning done just right. You have complete control over each client's settings to provide personally tailored advising for each plan. There are numerous settings which can be adjusted for each client to tailor the planning approach. To access these settings, navigate to the Advisor portal, select the desired clients, choose the Settings tab on the right. Each client has their own unique settings, so make sure you have selected the correct client before making any changes. Once you've made your selection from your client list and selected the Settings tab on the right, you can customize the planning strategies based on the client's individual needs. Once you find your best practices, you can preset all settings that will be applied to new clients under your Advisor portal, gear icon, Account, Client Presets area. Adjusting the global settings will not change existing clients' information. The first setting you can adjust for each client will be the planning method. This indicates how Right Capital handles the surplus or shortage of cash flow in any given year. There are 2 cash flow-based planning options and 1 goal-based method. The goals-based method is the most streamlined, as it uses the client's net worth, savings, and goals to project a client's plan. For this reason, it is commonly used for prospect clients. While the 2 cash flow options require inputs for net worth, income, expenses, savings, and goals to project a client's assets into the future. This provides the most detailed plan with cash inflows and outflows aligned with each year of the projection. The only difference between the 2 is that the cash flow-based plan will save excess income that is not allocated to savings, expenses, or goals. In contrast, the modified cash flow plan will spend off excess. The default setting within Right Capital is a modified cash flow-based plan, which underpromises and overdelivers on the expected savings a client can assume. Cash flow in simulation starts determines the timing of cash flow projections, whether we're using a rolling 12-month projection or illustrating a calendar year-based projection starting at the beginning of the current year or the next. Current month and January 1st of next year will not include the current year within the future cash flow projections. Thus, any income, expenses, or goals will need to be aligned with the following year in order to be fully calculated within the analysis, while January 1st of this year option will include the current calendar year within the cash flow projections. The default setting is the current month, which projects a client's assets 12 months from today, aligning the cash flows with next year's projections. If a glide path is enabled, the client's current investment allocation will be slowly migrated into the glide path allocation over a specified number of years. The planned distribution method determines how manual distributions interact with required minimum distributions, which are automatically calculated by Right Capital software. Options include having the manual distributions added to the required minimum distributions, having the system calculate the greater of manual distributions and required minimum distributions, or overriding the system's required minimum distribution calculations to only use manual distributions input by the advisor. This setting applies across all account types. The default setting will have RMDs added to any manual distributions. The HSA distribution setting determines when the system will start using HSA accounts to fund medical expenses. This can start immediately at one or both client retirements. If you start to fund medical expenses at the first retirement, HSA assets will accumulate until the year the first client or co-client retires. If you select Start to Fund Medical Expenses at second retirement, the HSA distributions will start after both clients retire. This setting is helpful for advisors who want to control the HSA distributions and what they fund. The default setting in this area is to start to fund medical expenses immediately. The Include Bank Accounts in Investment Allocation checkbox will allow Right Capital to include cash held in bank accounts within the asset allocation mix, typically displaying an overall higher percentage of assets held in cash. Next, advisors can choose to use taxable accounts to fund IRA and 529 savings when the current cash flow year is inadequate. This setting will automatically calculate withdrawals and taxes from the taxable investment account to maintain savings goals during years where other income sources are unable. Rebalance across account types for the current allocation is a setting that allows Right Capital to average the client's investments into one portfolio breakdown. This allows all of a client's assets to grow by the average rate of return and standard deviation over their planning horizon. Next, we have an option to take annuity required minimum distribution from IRA accounts first. If checked, this setting allows you to delay taking withdrawals from qualified accounts with lifetime income guarantees by satisfying the annuity's RMDs from the client's traditional IRA accounts or other qualified annuities. This allows for the ability to delay beginning withdrawals on the lifetime income annuity in order to provide a higher guaranteed income amount for your clients. These settings allow each client plan to be customized to an individual client's needs. They can be changed at any time to demonstrate a specific scenario. This freedom allows advisors to customize plans based on the unique situation each client faces. As always, if there are any additional questions on how to adjust clients' individual settings or assign global settings to each new client, please reach out to our advisor support team through the live chat feature on the bottom right, or search Right Capital support options within the Help Center.